All right, ladies and gentlemen, got your watch list coming in to August 8th, 2019, and today was insane. Tomorrow's going to be insane, the day after that, and the day after that, oh yeah, you guys get the point. But in all seriousness, today was insane. From the bottom, we gapped down about 350 points, dropped another 200 points. We were down like 550 at one point, and all of a sudden, we are right back up. During all this, I deployed a few soldiers. It came back up. It was surprising. It looked like a carbon copy of yesterday. I got faked out again, but that was, I guess, my fault for trying to expect. However, something really big happened in the market today, and even since Monday, and even coming in before that, and it's at the heart of that TLT play that we made. But we need to talk about that. We need to talk about what that we're going to expect tomorrow. So I got your keys for tomorrow, I got your rundown for today, and I got your plays. So like what you got for me, huh? You guys know the most important thing you need to do? Post your watch list below, and we're gonna be live because we're live Monday through Friday, 30 minutes before open. It's pinned in the comments. It's in the descriptions. I'm gonna see you guys there tomorrow. So I will just straight up tell you what happened here. You guys could see TLT. This was up a lot today. It finally had the gap up and the sell-off I was looking for, but the fact that it started to do that here is crazy. But this is the thing that we saw. There was actually two things. The first thing is the move on TLT, or the bond rates in general. So here are your keys, but now this move that we've seen, we're going to pull up even the 30-year and the 10-year, but take a look when you see this 5-day move. Starting from here, you guys could see that this is the biggest. This is not typical, especially for American bonds or US bonds. Pretty much any time you've seen the 30-year bond move more than 40 basis points in a 5-day period, it is usually signaled a big change of some sort. Now, it's like a down Friday, down Monday indicator, which we saw. It could symbolize a bottom, but for the most part, the concept of bonds representing and the bonds coming down representing a flight to safety, it has usually preceded some negative things. And again, we've even seen how the bonds have moved, and we've compared this and gone back with TLT. This is literally, without the situation of Brexit unfolding, we're seeing that. Without an election taking place, we're seeing that. And really, I'm saying those two events because these were the last times similar bond moves have happened. Now, you can't push it back to the financial crisis and all that stuff and see what's happened there, but this is still important for where it's at now. It's hard to tell what's happening here. I did go over on stream. I will make a separate video of the main things I'm really looking for if something is going to, explode. But for the most part, this has been something that it's saying a lot. Now, even with that, we got different prices and future prices that changed today along and related to the Fed, even though we had, I think it was Fed Evans spoke today, and he said something advocating a 50 basis point cut. The key that happened today with some of the rates now, both the Fed futures and just the bond rates in general, we saw the expectation of an emergency rate cut shoot up to 25%, and then now the rate cuts, or the odds for a rate cut coming in September, have gone up like 55-65%, which is taking us to that cusp where now the market is really, in 5 or 6 days from the Fed and everything else, it's already pricing in that cut. And then now they're talking emergency rate cut, which we discussed a few days ago. And if that happens, then that is really going to be something bad here. So that is something big. Again, we've said this day after day, there is volatility. This is volatility when it makes these moves. Now, the best thing I could do is to encourage you guys to keep your head in the game, understand where things are going for the future and looking ahead for that, and then also controlling your budgets and capitals with these plays now. But this one's for you guys. I want a pony, not that. Everybody wanted their pony. However, they forgot. The poop comes with the pony, my friends. I know. That's what happened today. We made a few plays. I'm going to go over the plays I made. I lost about, on the smaller account, lost about $200-$250. A lot of the plays, we buy them, then they got slashed 50%. Some of them held up, and there is very, very big important keys to learn from there. It is both the timing of it, the controlling of the capital, and the risk reward that you're taking and when you are going for certain stuff. Everyone's going to have their own different risk tolerance, this and that. But the key is, when do you decide to take the risk? That's what we saw today with the market gapping down 400 points this morning. it was a better opportunity for me to go after a certain risk reward, even playing some of the weeklies. And it would have been either the day before that where we gapped up and the range wasn't there. But again, all of today, again, the best part of today is showing you how wide the range is. So keep your guys' head in the game. Get ready to watch for this, but account for what you're spending and everything with the budgets that we've talked about. Not every play is going to be for you. And I'm kind of excited after some of those plays we made today and taking some losses. It's going to make you think twice before copying somebody on YouTube without even taking any account into your account or your budget or anything like that. We'll call this the great shakeout because now, again, too, I still want to go get calls and I'm waiting for those. And that's something we're going to talk about here in the keys. But there was an easy ride. There was an easy one to get. When there's plays like TOT where it could easily be telegraphed, I'll be posting them. But now this is going to make people really start to think twice of, oh, okay, people are getting this. Should I grab this? Do what you want, but control your budget and look at your account. There's no way you're going to be able to take them all, and everyone's going to be operating differently. So keep that in mind. But this is where I said, man, traders are made and the traders are going to fade. What you do from here, whether you've won, whether you're taking a loss, what do you do? Where do you go from here? How do you handle it? You clean up the pony's poop. So there's that. The position size is king, you guys. Contracts are not frogging. So some of the puts are, but on the call side, and this is what I'm worried about, we looked at a lot of plays, but the contracts weren't frogging. If you guys don't know what that is, search the trading fraternity frog. But essentially, the premiums and the theta decline was so high, these contracts weren't losing value, and then once they go in the money, you're making money. Literally, they're at par with what the market was pricing when there was some of these bounces, and that's kind of nutty to think about when you consider a 500-point rip up from the bottom. The contracts gained zero premium, and the market was pricing that in already. How is that possible? It's the high spread, so that's something you got to watch out for. But now the puts did get whacked a little bit, but it all depends on the time frame, and that is one of the things too that I did today. I grabbed multiple time frames. I went from weeklies to next week to September's, and I think we even got some October's in there too, because each time frame is going to have different premiums and pricing associated with it, with different risk rewards. And that, again, that's exactly what I'm going to be hunting for tomorrow. If we do see the same opportunity to go after it, I would pretty much repeat what I did today with smaller position sizes. And even then, if I wanted to, that's what's probably going to make me, because I'm going to even have my own hesitation with that moving forward. So there's that. The 30-year bond that we talked about in the September emergency rate cut. These two are the most important things. And I think putting this into perspective, we are going to start seeing some big moves here with TLT, with bond rates, and what this is going to imply for the market. There's many levels that we're waiting for, but I even said this today. We're still waiting for the retaliation, and the retaliation of the retaliation. The market is reacting to the Chinese yuan. It's reacting to trade talks. It's reacting to nothing, and I think that's what we have to watch out for, is what it does during nothing, but then how it's holding up right here and where it's going from here when the market isn't giving it that same exact stimulus. But now the key we are going to watch out for is going to be with trade. It's going to be when Trump actually does the 25% tariffs. It seems like everything's pushing towards that. And then again, how the markets respond with where the Chinese yuan gets fixed by the Chinese government, and then how it trades throughout the day. But if we start to see other global developments, this is not going to be good. But then also too, so the lens is getting kind of bearish, if I would say that. And again, I think I just got 25% more bearish with that emergency rate cut thing being discussed. But the thing that is making me, view kind of, it's hard to see the positive in this environment when we know we are going to have more trade talk or negative trade news. We could get a reaction from the Fed, but the key is going to be with the bonds. So once we see what the bonds do, if that could change around, that'll be good. But again, it's still hard to get anything but bearish. I think I'm more neutral with starting to lean towards the bear side. And a big part of that is just even the calls are not cheap. Even that, because even the incentive to be a bull is very, very low as far as the premiums go. And if I wanted to add long, it's not really there for me right here. So it's going to get exciting. It does not mean I'm not going to look for those plays, and I'm going to keep some in mind. And we did buy calls the other day too. And depending how every range sets, we're going to look over those. So let us get into the plays. Where are the no poop ponies? This sucks. Right off the bat, we made a few different plays today. Which ones did we get here? Grabbed a Nvidia. That was a weekly. That one got smashed for 60 cents right off the bat. But I'm going to be looking at the Nvidias. I got an August Beyond put coming into next week. A next week Micron because of news. And then this Ultra, I actually hated that play. But they had some news. So those are some quick ones right there. But I do, starting from the bottom here, I'm going to go to Nvidia. I like Nvidia a lot. I got the weekly, and then I believe on the other account here on the Robinhood, we grabbed the next week. For I think I spent like $67, so it's at 45. But for it to drop 32%, really not too bad. But then again, that was the second average after losing that first 60 on the weekly. But then again, you'll see how fast the weeklies change. But I like Nvidia again. It has a relation to the chip maker. But the thing I like about that Nvidia in next week, it ends up covering its earnings. So I don't think that's too bad. I'm going to keep my eye on that. I'm going to watch Nvidia on the put side. Alibaba, we did a put spread. I thought I got a more time on this, but I don't think I did. I grabbed a weekly spread on it, and we only spent $20, $23, but this one pretty much died and went down there. And I'm going to look to get back into it. This was a 149, 145 spread, so it was like $20 with a $400 max reward, but it was playing anything there with Baba around here. It was very, playing the lower side. But I'm going to watch out for these, and I'm going to look to get a September or October spread here with Baba. Again, all depends on the pricing, and if there is even a positive move here and they've gotten cheaper, they're going to be good. But I think a lot of the next week puts held their value a lot better. And that's where you're kind of starting to see, because if tomorrow does go up, the next week, August 16 puts, those are going to start capitulating and get below Monday's prices that already happened with the weeklies here today. So there is even the risk reward with what could happen. And that's the thing too. If you get even options with time, even if you bought a put with time, although they hold their value a lot better, even if the stocks make a downward move, the issue is they're not going to appreciate as fast again because there will be less time on the contract, and it depends to how long it takes for them to bounce back. But watch Baba. I really like those a lot. They were very, very interesting today. And, they didn't move up too crazy comparatively, or they were actually leading in the beginning, so the market kind of caught up to them. I really like Caterpillar. They held down most of the time, and now here's the thing with Caterpillar. It still closed down 1%. Even though the puts didn't perform really the best, again, since we bought them, we got that next week. It went down about 37%. We got them at 40s. And again, I'm even showing you guys this now because if you did go long on PATIENCE, you could average on a lot of these or even get even more time now at different prices. So there's that. And then even if you are down on some of these, if you did buy them, again, you could only average again if you could control your budget here, if you have enough money and it makes sense without overextending yourself. But you got to pick and choose which ones you like. But I really like Caterpillar. They're extremely hard to play. The volatility on these will skyrocket up, and that will get you far out the money. But then at the same time, when they do start to move, it's good. But the fact that they still close red, their relation, everything, I think that's very interesting. So I'd keep my eye out for them. Then there's Apple. They dropped a ton this morning and then came back up. So they had a very, very strong move. So you could kind of see how they're leveling out. They're really at their equilibrium here where either they've dropped below before and where they've kind of just grinded up and held for a really, really, really long time, and they're at the lower end there. But watch that. Again, we also have different chip makers there in general, like Nvidia and then even Micron, but how Apple performs could be good. I usually would like them. I'm going to again see how they play out, but I might want them on the calls. If when the pricing for calls gets good, I'm going to look for there. But I still am holding those short calls. I have a pretty big Apple position that's still in my favor there. Well, I've made back $4,000 of like the $5,000 loss on it. And there's Amazon, and Amazon just had nutty moves today. I like it, but the spreads are literally saying the same price. So the spread that we cut out yesterday, same price. I did get a put spread on accident today. I tried to put in an order really, really low, and I canceled it, or I edited the order, and it wouldn't let me cancel from the screen. I changed it by 5 cents and I thought it wouldn't get filled, and I got filled for next week. It was August 16th, but Amazon's getting ready to make some big moves, or it's at least showing the potential, and you could kind of see again, just like Apple, how it holds up. It's kind of at a lower equilibrium level, or even a crucial point, but it's been selling off fast and moving fast, and that's really the only reason I would want to play it, and why I think other people would be even drawn to it. Big dollar moves, and it can move quickly. So there's that, and then lastly, we got that next week Beyond put. I'm going to see where they're at tomorrow. They held support surprisingly at this level, but again, with any of these IPOs when they come here, especially one like Beyond, especially after a secondary offering, I think it's really only a matter of time before this thing plummets. So again, I don't want to make the same mistake. Last time we called Beyond on the upside when it ran up, we ran out of time. So we had those ones for last week. Those are up for the week, but down overall. They're kind of holding their value. I just grabbed, more time. I'm getting contracts with time, the put side, and letting it go from there. I will probably use some more spreads, but I might even pick up another one of these tomorrow. I'm just going to keep getting more and more time and waiting until this really falls out and it has the flush from the price that the offering was at, and then mixed with the market too. I think it's going to be ugly. So keep eye for those. Then there's TLT. I like TLT now. It finally hit 143. I'm holding those plays. I didn't sell out of the 25. The premium I sold on the 41 went down. The other 25 I know my strategy next time it kind of goes up here. And we have to see, though, again, because if it doesn't go up from here, I'm just going to use this as an opportunity to buy more if and only if the IV really drops, and that probably won't happen after a day. So it's going to be a really interesting ride here in the next few days. Hope you guys are ready for that one. But in general, keep watching it, and I'm specifically watch it in relation to how it's moving with the market. But usually the bigger these pullbacks, the bigger the moves, the more you can anticipate in the midterm, or I guess long term, if you like to say. Then there's UVXY. This thing dumped. It barely closed up, but this is what I'm waiting for. You see this huge VIX pop. If it drops, it could create a really, really good opportunity on the short term, and that's probably what I'll be looking for if I did want to do any more short-term plays. But if it does come up from here, that is going to be indicating something big. But the VIX overall has been cheaper, but the risk reward is always been expensive. So even though it's a cheaper contract for what you're getting, you have to risk a lot to actually get in the game, and it's a higher initial cost. And even if you do a spread, the higher initial cost doesn't really give you a good risk reward after you cap it. So watch out for those. Lastly, GLD. And GLD, again, I said this could have been the next play of the week for this month. I was always too patient in GLD and SLV. They went crazy. I thought they were holding up a little too high. They came down. I was kind of like, I thought I could wait a little longer. They popped. The contracts finally did a 200 to 400% move, which was great on some of them. I'm going to look for these on the shorter term contracts, kind of like I was saying with the TLTs if we did want to play a move, but gold is above 1,500. It's going to get a little crazy there. I got to even find my gold coins. Where they at? But how these move, and again, now even relational with what bond rates have done, if gold starts to make a big move up and even silver starts to make a big move up beyond even the play itself, those could even indicate some more concerns there that something could be brewing under the surface here. So I'm going to watch that. Then watch HD. I still like it on the call side. And again, this is kind of like Caterpillar. They did good yesterday, but they still closed down. So again, try to highlight and focus and understand here what actually did good and what did bad. But I'm going to be watching that. If they could hold up, and then pretty much if there is a reversal now, so if there's a down, other stocks don't go up as much, so you essentially see the McDonald's and stuff that really killed it today don't move up. You're going to see the Home Depots and Caterpillars probably go up there too, so I'm going to keep my eye out for that. I really like that. UNH, I'm waiting on both sides. The contracts are expensive, but now even coming into tomorrow or Thursday, things are going to get pushed to the wall. I think there's going to be a good opportunity here on both sides. I'm going to look at the pricing in the morning, and depending on that, might set up for next week. Walmart, we played a bunch of these. We put $40 on the weekly. They got smashed there. However, I'm still in the game on this one. I think this was going to be good. We're starting to try to identify what we could see next week, but this is one that did a little bit better. Actually ended up closing up 1%, so that one's good, and I'd watch them in conjunction here with McDonald's, which really killed it. And the thing about McDonald's on the daily, this is probably going to be our bounce stock too, where I'm now, as it starts to get up near these highs, even with the volatility, if this is clear that investors are rotating into McDonald's, you might see the same exact thing here with Starbucks. These could be the plays that even despite the volatility, yes, they might drop here and there, but then they're going to do their own longer run thing and just start going up. So I really am going to start identifying those as the call or the bounce plays we're going to want at the same time as some of the other more growth stocks that are going to have higher risk rewards. But again, it's just hard with the price of the call. And we already talked about Walmart. And guess what? That's it, baby. So I will see you guys in the morning. Make sure you post your watch list, like the video, keep your head in the game, baby, and let's go.